Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, January 20, 2026, and here is everything you need to know as the markets open for today. Wall Street remained closed on Monday in observance of Martin Luther King Jr. Day. Wrapping up the week that concluded on Friday, markets ended mostly flat with modest weakness across major indices. The S&P 500 declined 0.06%, shedding 4.46 points to close at 6,940. The Dow Jones fell 0.2%, dropping 83 points to 49,359. The Nasdaq Composite shed 0.7% over the week, reflecting mixed sentiment despite some strength in the AI and semiconductor space. Taiwan Semiconductor's stellar fourth-quarter earnings, with profits jumping 35% to record highs, sparked modest rallies in chip stocks like Nvidia and ASML. However, banking sector stress continued to weigh on sentiment. Major lenders including JP Morgan Chase, Wells Fargo, and Citigroup posted disappointing results amid President Trump's proposal to cap credit card interest rates at 10%, a move that caught Wall Street by surprise. Capital One and Synchrony Financial saw shares tumble over 6% and 8% respectively on these rate cap concerns. The broader economic data showed resilience though. Industrial production rose 0.4% in December, beating expectations, while capacity utilization climbed to 76.3%. Earnings season is accelerating with Netflix reporting this week, and company guidance will remain critical as investors weigh expectations for 12 to 15% earnings growth projected for the S&P 500 in 2026. Moving to Indian ADR performance overnight, all four major Indian American depository receipts showed mixed movement reflecting broader global caution. Infosys Limited sponsored ADR declined 1.01% to $18.63, eroding 19 cents. HDFC Bank Limited sponsored ADR gained 0.43%, rising to $32.65. ICICI Bank Limited sponsored ADR moved higher by 0.16%, closing at $30.87. Reliance Industries Limited sponsored GDR declined 3.57%, falling to $62.10, reflecting profit-taking in energy stocks. The weakness in Reliance comes as global oil prices remain under pressure amid geopolitical tensions and tariff uncertainties. For Indian investors, the takeaway here is that profit-taking continues in heavyweight sectors while selective banking strength persists, though FII selling pressure remains elevated as overseas investors manage global portfolio risk. Turning to Asian markets and early morning direction cues, we have a mixed picture. Japan's Nikkei 225 index fell 0.65%, to close at 53,584 on Monday, reflecting weakness in export-sensitive sectors amid tariff concerns from the Trump administration's escalating threats on European allies over Greenland. Hong Kong's Hang Seng index declined 1.0% to 26,564, extending losses to a third consecutive session as China's slower-than-expected fourth-quarter GDP growth of 4.5%, the slowest in 3 years, weighed on sentiment. Shanghai's composite index rose 0.29% to 4,114, showing modest resilience on domestic economic stimulus hopes. China's central bank has signaled potential rate cuts and reserve requirement ratio reductions to support growth. GIFT Nifty futures, which signal the likely direction of Indian market opening, are indicating early weakness. As of late last night, GIFT Nifty was quoting substantially lower than Nifty's previous close, suggesting that India's benchmark indices are poised for a cautious to slightly negative opening. This weakness follows 3 weeks of FII selling pressure and elevated market volatility amid geopolitical tensions and tariff uncertainties weighing on global risk appetite. The overarching global development affecting markets this morning is President Trump's renewed tariff threats against 8 European nations, imposing a 10% tariff starting February 1st and escalating to 25% by June 1st. Unless the United States is permitted to acquire Greenland from Denmark. This geopolitical escalation has rattled investor confidence globally. The European Union is preparing retaliatory measures worth €93 billion on American goods, and may activate the anti-coercion instrument, which could restrict access to public contracts and banking services. For India specifically, while not directly targeted in these Greenland tariffs, the broader tariff escalation amplifies uncertainty around global trade. India continues to navigate existing tariff pressures under previous Trump administration, reciprocal tariff frameworks, and remains engaged in delayed trade negotiations with Washington. The currency weakness we have seen in the rupee, which touched 91 per dollar recently, adds another layer of concern for importers and complicates near-term market sentiment. Domestically, the market is focused on near-term catalysts ahead. The Union Budget is scheduled for Sunday, February 1st, a date confirmed despite falling on a weekend, and this will be Finance Minister Nirmala Sitharaman's 9th consecutive budget presentation. Markets are watching fiscal policy direction, capital expenditure allocation, and potential tax tweaks closely. Banking and financial sector stocks remain in focus following last week's Q3 earnings results. HDFC Bank delivered strong results with consolidated profit jumping 12.17% and core net interest income rising 6.4%, beating market expectations despite an 800 crore impact from new labor code implementations. ICICI Bank, however, disappointed with consolidated net profit sliding 2.68% as provisions spiked following supervisory review adjustments. Both banks continue to gain market share through strong loan growth, but profitability margins remain under pressure from funding costs and competitive intensity. Foreign institutional investor outflows persist, with data showing over 11,700 crore in net selling this month alone, continuing the unprecedented liquidation of over 166,000 crore that occurred throughout 2025. Domestic institutional investors, however, have provided partial support, stepping in with over 4,000 crore in buying. This divergence underscores how domestic support is only partially offsetting FII repatriation, leaving net capital flows negative heading into this week. From a technical perspective, the Nifty 50 faces key support at 25,400 to 25,450 levels. Immediate resistance is located at 25,600 to 25,700. The index formed a bearish candle with lower highs and lower lows in recent sessions, indicating a corrective bias requiring caution. The relative strength index remains above 50 but is showing early signs of weakness, while the MACD histogram is flattening. For Bank Nifty, support is placed at 59,800 and 59,200, while resistance zones extend to 60,100 to 60,400. Bank Nifty has held marginally better than Nifty 50, trading near the 20-day exponential moving average, suggesting relative resilience even as the broader market consolidates within a weakening trend. Volatility measured by India VIX remains elevated in the 10 to 11 range, signaling continued caution among market participants. Commodity markets this morning show important moves for investors watching margin pressures. Gold climbed 1.64%, rising $75.36 to $4,670.87 per troy ounce, as geopolitical tensions and currency weakness boost safe haven demand. Silver surged 4%, jumping $3.65 to $93.68 per troy ounce, reflecting robust industrial demand and investor appetite for the metal as an alternative store of value. West Texas Intermediate crude oil gained 0.27%, rising 0.16 cents to $59.39 per barrel, as geopolitical tensions provide modest support even as demand concerns persist. Natural gas declined 0.54% to $3.2350. For Indian market participants, the silver rally is particularly noteworthy, given India's cultural demand for precious metals, while crude oil stability near current levels provides some relief to refiner margins and energy infrastructure valuations. Here is the day's action plan. Given the intersecting pressures of FPI selling, geopolitical escalation over Greenland tariffs impacting global confidence, elevated India VIX, and technical weakness below the 20-day moving average, traders should exercise caution and approach near-term rallies with a bias to take profits. The session may remain volatile with intermittent strength on dips driven by domestic institutional buying, but the underlying trend remains corrective. Quality banking stocks showing strong earnings like HDFC Bank may attract selective buying on weakness, but broad-based upside looks challenged until we see stabilization of FPI flows or positive developments on US-India trade negotiations. Intraday traders should respect support and resistance levels strictly and avoid adding to positions near resistance zones. For long-term investors, this correction offers opportunities to nibble at quality large-cap names, though scaling in rather than aggressively buying now makes prudent sense given the macro uncertainties. Watch the budget on February 1st for potential policy signals that could influence subsequent trading direction. Stay tuned for the evening wrap and send in your questions to us. Subscribe to this podcast to hear US every morning at 8 o'clock and have a fantastic trading day ahead.